Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 English medium paper question number 7. Let's go to the question. What is the requirement? They request us what is the requirement? Requirement net profit for the month ending 31st January 2025. Look here. Net profit for the month ending 31st January 2025. Net profit. Okay. After that, VAT control account balance as at 31st January 2025. 31st January is closing balance. VAT control account balance as at 31st January 2025. Month ending of Vimal Traders. Therefore, to identify these two, net profit and VAT control account balance, therefore I prepare the equation impact. Okay, equation impact. There is a equation I prepare. Immediately there is a easy ways to identify the impact of VAT control and identify the net profit. We can easily I can say you, but this is the explanation to identify you assets. Equity is the explanation of identify both two, equity plus liability. Immediately I prepare this one. Look here, there are 4 transactions there. Look here. First one. Firstly, Vimal Traders, a retail business, was commenced on 1st January 2025 by investing 300 in cash. Okay, 300 in cash. Cash investing, there is asset increase in cash. Equity plus 300, this is the 1000, no? 300, this is the 1000 rupees. This is the capital, this is the impact. Capital. Okay, the first one. What is the other transaction? Look here. Okay, this business is registered for value added tax and carried out all cash transactions through the bank account. The following transactions have occurred in the business during the month of January 2025. Okay, first one, purchasing goods from Sampath Traders for 944 on credit inclusive 144. Purchase goods from Sampath Traders for 944 on credit purchasing inclusive 144 VAT. Inclusive means this amount is included VAT amount. Therefore, at the impact, what is this? The purchasing amount without VAT. Amount without VAT and plus VAT, and this is the amount with VAT. Amount with VAT. Look here. There is a 944 credit purchasing inclusive 144 VAT. Therefore, 944 is total one, inclusive 144. 144 is included there. Therefore, VAT is 144. 944 is total one. Why? 944 included there. The VAT is included in this one, 944. This is the without VAT is 800. Okay, at this point, credit purchasing, look here, there is a stock is 800 without VAT plus stocks. The second one is we must payable to create creditors total one with VAT 944. 944 must be payable to trade creditors 944 plus trade payable. The other one is VAT short. VAT short. At the purchasing, VAT must be deduct. At the sales, look here, remember this, remember one, look here. At the sales, VAT should be payable. VAT plus. At the selling point, I am a business, I am selling some goods. At this point, VAT are increasing. But at the purchasing, remember that at the purchasing, VAT is deducting. Okay, purchasing VAT deducting, sales VAT plus. Okay, at this point, what is the impact? At the purchasing, VAT is deduct. VAT is there. VAT deduct 144. VAT deduction. Sales VAT increasing. Okay, let's see the third one. This one. Return goods purchased from 177 Sampath traders inclusive 27,000. Return goods purchased 177 to Sampath traders inclusive 27,000. Inclusive means 177 is included VAT. Okay, at this point, look here, what is the schedule? This schedule 177 is there, 27 VAT is there, without VAT is 150. Okay, at the purchase return, we must identify the opposite side of this. This is the purchasing, this is the purchasing. We must create the opposite side. This is the purchasing. This is the credit purchasing, credit purchasing. This is the second. The B is purchasing return purchased. Purchase return. Therefore, we must create the opposite side of this. 800 is what's that? The big man is 800, the small is there 150. Based on the 800, we must create a 150 shorten there. 150 short, 800 is there, this is the big person, 150 must be opposite. This is the plus, 800 minus stocks. After that, there 944 is 177. 944 related to 177. 944 is related to trade payable. 177 is related to this. Therefore, this is the plus, this is the minus. Trade payable. After that, what is the VAT amount? VAT is related to 144. 27 is 144 related. 27. 144 is there. 27 is there. 27. VAT is previously minus. We must plus this. VAT. Okay. This is A transaction. This is B transaction. Okay. Let's see the impact. Okay. Let's see the next one immediately. Next one, C. Sold goods costing 600 for 885,000 for cash inclusive 135 VAT. Look here, we must prepare the schedule for this. This is the schedule I prepare. This is the cost plus, this is the cost value, this is the plus gross profit. The seller can create a selling price without VAT. Selling price selling price without VAT. Without VAT. Okay, this is the cost of the goods. Seller add gross profit. After that, seller create a selling price without VAT. After that, we must add VAT amount, and another selling price is creating selling price with VAT. Okay, we must fulfill this schedule firstly. Look here. Sold goods costing 600. Cost means their costing is 600 there. Cost. Okay, let's see other one. For 885 for cash. Okay, inclusive of 135 VAT. Inclusive means this point is included VAT. Okay, 885 is VAT included amount. VAT included. 885 means selling price. Why? Look here. 885. Look here. Sold goods costing 600. For 885. 4 means selling price. Another thing is inclusive 135 VAT. Inclusive means this included VAT amount. Okay, therefore included VAT amount is there and VAT amount is 135. What is the selling price without VAT? This is the with VAT. No, 885 deduct 135 must be 750. 750 we can calculate gross profit. What is the gross profit? Gross profit means this is the difference of this 150. How can we identify 750? 885 minus 135. After that we can identify 750 without VAT selling price. Okay, this is the schedule. I can create impact of the equation. 600 cost must be deduct assets. Okay, must be deduct assets. Okay, this is the assets. Asset column. 600 must be deduct stocks. After that, gross profit impact to equity. Equity plus 150 impact to equity. Equity is there. 150 gross profit. Okay, another thing is there. This is a selling price. Selling price is there. We can identify selling price. This one is okay. This one is okay. Selling price is this. Selling price is on cash. Look here. Cash basis sales. Look here. For cash, therefore we can receive 885 total value for cash. Therefore, I add to cash account. 885 cash. After that, VAT amount at the sales point. VAT must be increased. VAT increase. They are 135 VAT. This is the impact. Okay. Let's see the last one. Look here. Paid the full amount due to Sampath Traders. Paid the full amount due to Sampath Traders after receiving a cash discount 30,000. We must create a schedule. At this point, this is the trade payable. After that, we must deduct discounts received, and we can identify paid amount. At this time, we must identify payable amount and easily identify the discount allowed amount. Look here. Paid full amount due to the Sampath Trader after receiving cash discount means discount received 30,000. Let's see the 30,000. 30,000 is there. 30,000 means discount received. Okay, after that we must identify this one and this one. Okay, trade payable. What is the payable amount to? Payable amount to, look here, payable amount to trade payable. Payable amount to trade payable. Trade payable is there, look here. Trade payable impact, look here. 944 is there, 944 plus, okay, trade payable 944 with VAT. Okay, trade payable must be identified with VAT. Okay, 944 plus, after that trade payable deduct 177, there is no impact to, this is the VAT, trade payable. This is the remaining payable balance. Firstly we must payable 944. After that return outward now. After that we must deduct and identify the remaining balance of trade payable. What is that? 3687. Okay, 767 with VAT. Okay, this the 767 is trade payable 676. Okay, after that we must deduct discount received amount 737. This is the paid amount. After that we can identify the impact. Look here, 767 is deduct from trade payable. Trade payable is there. Trade payable is liability. We must deduct this column. Trade payable 767 trade payable. There is no VAT impact. Okay, at the cash payment to trade payable there is no VAT impact. Okay, trade payable. Discount received is impact to this one, equity plus 30, discount received. Cash paid amount 637 cash asset. This is the total impact to equation is there. Okay, after that what is the requirement of the question? Look here, requirement is question number 7, net profit. Based on the net profit, what is the column related to net profit? Equity column. Look here, equity column. Capital is not impact to net profit. The second one is gross profit 150 impact to net profit. After that discount received is income plus this is the gross profit is 180. Okay, 180 is gross profit. There are some more answers. 180 is there and there. VAT control account balance. We can identify VAT control account. VAT control account balance we plus minus. Okay, VAT control is there liabilities. Look here, VAT control liability. There are VAT short. Look here, VAT short. VAT minus. VAT minus means the liabilities are credit dials. Okay, liabilities are credit dial. Therefore I can create VAT control account there. Look here, VAT control account there. There is a VAT control account. VAT control account is a credit dial. At the minus of this VAT control account should be debit to VAT control account. Why? VAT control account is credit dial. Credit short must be plus, debit short must be minus. This is the minus short, therefore I debit it. Okay, the second one is VAT plus. VAT plus means there. Plus means credit 27. There is another VAT short 135 plus. Plus means credit 135. There is only VAT shorts. Okay, balance sheet. balance sheet. That control should be balanced. They are 12, 6, 1, 1, 6, 2. Okay, 12. Okay, this is the balance. 18, 5, 1, 6. Okay, 18. Balance is there. Balance forward. Balance carried down. Okay, 18,000 is their credit balance. 18,000 credit dial. At the minus shorts must be debited. Okay, plus shorts must be credited. Why? Bad control is credit dial. Credit dial must be happy with credit shorts. Therefore, happy shorts must be plus shorts must be credited. Okay. Therefore, 18 credit. 18 credit. 18 credit. Okay. 18 credit. 18 credit. Answer 18 credit. Answer is 4. Answer is 4 for question number 7. Okay, let's see. The 8th one is the very crucial point. There are more time to spend this question number 8 and 9. In next video we must meet question number 8.